Subscribe to our YouTube channel and press the bell icon to get the latest updates.
Hello subscribers, welcome to the Fast Profits Daily. I am Brijesh Bhatia. Trading is a game of sector rotation or a stock rotation, especially for a swing trader who is looking for probably a week trades or a couple of weeks trade. Holding on to the one stock may sometime not be fruitful, or probably if you look at the sector wise, if we just remember last 3 to 5 weeks, we started with PSU Bank gaining last month around 14-15%, but start of the November they started losing their momentum. Profit booking was seen. Private came back very, very strongly. Axis and ICICI Bank in the second half of the October. Then again, start of the November, they cooled off. We started November with the bang on HDFC Twins. And if you remember, I've done a video on HDFC Twins as well. In case you missed that, you can watch it. We started with second half of the October with the IT as well. Came back very, very strongly since their quarterly numbers. So yes, the momentum into the sector, or I would say the sector hopping, is very, very important as for a swing trader, or probably even if you're looking for a 3 to 6 months trade. Changing onto the sector is very, very important. Keeping on mind that what kind of sectors are performing, what kind of sectors are underperforming, they play a key important role for a trader. Investor also, keeping a broader base sector rotations is also important. So if I just look at the momentum over here, uh, we started with PSUs, IT, shifting onto the private banks now. HDFC Twins are coming back very strongly, leading the financial services. We saw IT coming back very strongly. Pharma in the last couple of weeks have been coming back very, very strongly. Look at the Sun Pharma, right from 900 levels to 4-digit mark now. So there have been sector rotations happening in quite few of the momentum. We saw footwear stocks in last 2 3 months. I have created equal weighted footwear index. In case you have missed that video, you can watch that. So yes, the point is that sector rotations, you need to keep in watch what kind of sectors are outperforming, what kind of sectors are underperforming. And in today's video, I'll be indicating one sector where I believe the traders should keep a watch on is the cement space. Uh, as usual, we created an equal weighted index on most of the videos you have seen, but in this video, I am creating a market cap weighted cement index. As we don't have a particular index for cement over here, like we have in IT, like we have PSU banks, like we have financial services, where each stock have a weighted defined by the NSC, which is the index creator. We don't have as of now the cement index, but we created a market cap weighted cement index. So just to keep in mind the index, just look at the screen over here. These are the stocks and the weights which I have assigned, keeping in mind the market caps over here. So the base to create this index was a minimum market cap of 5,000 crores as on 2nd November 2022. These stocks have the minimum market cap of around 5,000 or above 5,000 crores. The weights, if you look at Ultratech, is assigned 38%, keeping in mind the market cap. Ambuja Cement with weights of around 21%, Shri Cement with weight around 15.5, 16%, ACC with around 9%, and so on, with the JK Lakshmi Cement, the least with 1.33%. Now, to create this indexes, because I'm not looking at the small caps or micro caps. I'm just looking at the large and mid caps over here, and that's the reason I've taken a minimum market cap of 5,000. If you are a small cap investor looking for a small cap, you can look for all the stocks into the cement space, and avoiding and creating those index. But I'm keeping in mind the large caps and the mid caps, just to gauge how the trend has been there for a cement space. And this way the weights been assigned as per the market cap, and we'll look at the index how it's been performing. So if I just look at this chart over here, this is the first chart, market cap weighted cement index weekly chart over here. And if you look at the weekly scale chart over here, right from 2016-17, the index has been taking support. If you look at this red rectangle structure, we saw 2020 downside, we went higher onto the cement space, retested the red box, if you look at, which is the now the resistance been turning support over here. And if you look at the momentum at current point in time, the momentum has retested the red lines over here, and the momentum is coming back very, very strongly onto the positive side. Additionally, if you look at this orange line on your screen, the orange line is around 200, is the 200 weekly exponential moving average of the weighted index we created. Now, if you look at on the weekly scale, it took support around 200 weekly exponential moving average, which is known as the long-term exponential moving average, and the momentum is turning northwards over here, indicating that the structure seems very, very bullish, and cement stocks could be on your radar for a bigger up move coming onto the index over here. Second chart, if I just look at over here, is the daily chart. Now, with the weekly into the support zone, the resistance turning supports, trend showing a positive upside with 200 is weekly exponential average taking a support over here. On daily scale, we are on a forming the bullish head and shoulder pattern. Though the breakout has been not yet above the neckline level, but if you look at the structure is in formation of a bullish head and shoulder. I'll wait for this structure of around 7,050, 7,100 levels to be taken out on this index. And then could be a rally. But yes, if you look at the structure over here, it is on a verge or are probably heading towards the neckline. Though the confirmation of breakout is not there, but if you look at the weekly scale over here, it seems to be showing a sign of positive structure, and the momentum into the cement space is very, very bullish over here. What could go wrong? Technically, I would say, and if I just look at the same market cap weighted index onto the daily chart, the risk is over here. If you look at this blue and orange line over here, the moving average, the blue is 50 days exponential moving average, and the red is the orange is the 200 weekly exponential daily exponential moving average. So if you look at the blue line is trending below the orange, which is known as the death cross. The short term average over here trending below the long term average, which is the 50 trending below the 200 days average. It's basically the death cross, and death cross is a sign of bearish structure over here. Importantly, if I just look at the current point in time, it is trending around 200 above the 200 days exponential moving average, but average is yet to be crossed over. We have seen this right from the first quarter 2022, Jan or Feb. We saw a death cross coming onto this sector, and the momentum was very, very bearish. Now, probably we may see a golden cross, which is the 50 days exponential moving average crossing above the 200 days average, which is the sign of bullish structure. So, a stock or index coming out from a death cross and turning out to be the golden cross is a sign of a bullish structure. In this case, it is yet to be giving a golden cross. Still, it is trending into the death cross, indicating a sign of a risk over here for our long-term traders. So this is the risk I believe probably should keep a watch on onto the cement space. And but weekly scales, I think the things are coming back very, very bullish for short to medium term traders. But daily, yes, head and shoulder breakout is yet to happen. Golden cross is yet to happen. We are trending into the death cross, which is sign of bearish structure. So I'll wait for the momentum, but yes, the stocks should be very, very important. What are the stocks? Keeping in mind, you should look at in case these breakouts. The first I would looking at the Ultratech, because Ultratech holds the highest weightage of around 38% into our index which we created. And if I just look at the first chart over here, the fourth chart probably onto the stock, the first chart, Ultratech by market cap weighted cement index. So I'm doing a ratio chart over here, comparing the Ultratech stock against this index which we have created. Right from 2008, Ultratech has been underperformer into this index. Probably it may change with the weights over there, because Ultratech might not have the highest market cap weights. Considering the market cap as of 2nd November 2022, I have considered this as the highest weightage of around 38%. And probably back in 2008, it may be some other stock with the high weights over here. But considering the videos now, I'm just considering the Ultratech as a top weights around 38%. And if you look at the 2008, it was been underperforming, and back in 2021 when it broke out of the previous swing high, it ended the lower high, lower low structure. And as per the Dow theory, the end of lower high, lower low structure, when the index or price makes the higher high, it generally known as the trend reversal. And since then, since 2020, the structure has been higher high, higher low structure, which is again a bullish structure. We saw breakout. If you look at this red line over here, we saw breakout. We retested this that breakout, and again the momentum has been on a bullish side. So the higher low structure indicate that Ultratech could outperform into the against the market cap cement index which we created. Second, if I just look at is the Ambuja cement over here, because being the weighted of around 21-22% into our index, this is the second top with the weights over here. Look at the similar structure 2008 2009, the falling trend line, the red line over here. We have seen a red line breaking out in 2022, and remember Ambuja is one of the I would say the top gainer stock in 2022, probably in the top 10, 10, 15 stocks of Nifty 100, Nifty 200. Now look at this structure. The falling trend line over here indicates that the end of a bearish tone. If you look at these two black line, horizontal line, we have seen the multiple highs been taken out over here, ending a bearish structure of lower high, lower low, forming the higher high, higher low. Again, a trend reversal in place as per the Dow theory. With the weights of around 21-22%, this seems an exciting opportunity for Ultratech as well as the Ambuja. What could change if in case you are a investor and looking have holding in the cement stock? One stock where I believe it's time to move out of that stock and may shift or probably move into the Ultratech or Ambuja. The one stock is Sri Cement. Now, Sri Cement has been one of the top gainer into the cement right from around 2008 2009. Have been outperforming this index with the weights of around probably 14-15% into our index. Look at the structure, the outperformance by big margin right from 2008, 2012 it has been, and since then probably 2020 this stock has been underperforming into our market cap weighted cement index. Now we have seen if you look at this red line, the breakdown happening, the breakdown retest have been done, and again the resumption of the southward journey indicates that it's time for an investor or a trader to avoid Sri Cement onto the probably onto the long side. And as an investor, you may swap from Sri Cement to Ultratech or Ambuja if you are holding on to the cement space and or want to hold the weights into the cement space into your portfolio. I probably believe yes, Ultratech and Ambuja, looking at the technical structure, have a potential to go higher, much higher. Looking at the comparing the ratio charts into the market weight cement index. So these are the three stocks we are looking at, considering the market cap of around 38, 22, and around 15-16% onto our market weight equal index. So keep a watch on the cement space. I believe as a trader, it is very important to hop into the sectorial space. Again, from which indexes you shift onto cement space? I probably think we have seen footwear stocks. I have done a video, I guess 3-4 months back. I don't remember the date. Uh, Footwear stocks have seen a huge rally, be it the Liberty, be it the Campus, Metro. The large cap of Bata has been slightly on a silent mode, but it had not yet fallen much. Probably it may have given a flat to positive return. But look at Liberty, look at the Metro, Campus have seen a huge uptick. So moving on from shoe space or the footwear space, I believe the profits can be used or the capital can be used into the cement space from the footwear space. And as I highlighted back then as well, why I believe that Campus, Metro, and the Liberty could rally over there when I've done a footwear stocks. So it's time for footwear to be a profit booking. And one of my colleague Aditya has also written a note. In case you missed that, just watch it on the footwear space. It's time for cautious. So hopping or the sector rotations for the traders is very must. In case if you are following our videos, I generally create a index where NSE doesn't provide the index. We have done cement, we have done footwear, we have done sugar index. In case If you are missing out, you can follow me on Telegram, Fast Profits with Brijesh. And I generally share the Nifty view. I just share the such kind of index regularly onto my Telegram channel. So stay connected with our Equitymaster. And for technical updates, you can follow me on Telegrams. So signing off, Brijesh Bhatia.